Welcome to another episode of the Weekly Crypto Check-In, recorded on November the 13th, 2024. I'm your host, Robert Swarthout. I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. It's good seeing you. Lots to cover today. It's been a busy couple weeks since we last recorded.
Yeah, busy couple weeks. Yeah, we didn't record last week because I was oddly doing something I'll probably never get to do again. I got to go sit in on the Georgia Supreme Court, so that was fun. I've never been in a courtroom where there's more than one judge, so that was a bit of a different dynamic.
Yeah,
and pretty cool to kind of see how that part of the legal system works. So.
Yeah, definitely. Well, welcome back. I'm glad that we're able to jump back into the check-in. Lots of news, to discuss in terms of Bitcoin, the elections, regulations. We can't do an update, it seems like, without mentioning our friends at the SEC. So let's jump in.
Yeah. Yep. And so obviously, we said, we didn't record until 2 weeks ago, but the last week is really where all this news largely comes from, and is going to be impacting you going in the future. So I guess we'll start at the Bitcoin news, and just kind of a smattering of Bitcoin news. Some of it's ETF based, other is just kind of more general Bitcoin buying itself. But so the first one being the MicroStrategy, and this just blew me away. Like admittedly, I have trouble seeing how this MicroStrategy thing just doesn't blow up in some bad way that people aren't seeing. Because so the news here is MicroStrategy announces a $42 billion capital plan, including $21 billion at the money equity offering, and targeting to raise another $21 billion in fixed income securities. And it's all going to go by Bitcoin. Like that's all that they do at this point. And it's just insane to see these numbers. I don't see, at the end of the day, like, is he going to hold forever? Maybe, but like, how does this not blow up?
Well, the he that we're talking about, for those tuning in, is Michael Saylor, Saylor, I think. OR. So if you want to go out and search on him and search on MicroStrategy, the company that he is the CEO of, somebody that I met 3 years ago said, Michael Saylor is the godfather of crypto, and people are going to look back on him in 20 years and, compare him to sort of like a Steve Jobs type. He's done more for crypto, this, and this. And this person was obviously very much a Bitcoin bull and a crypto bull and all this stuff. Then FTX happened. We go through this crypto winter that we're in. But I continued to see his name, right? Any kind of big moves, any sort of long bias, it's always like MicroStrategy, Michael Saylor. And then, yes, this $42 billion capital raise. I have a lot of questions, the least of which is who's helping arrange this? Who are the investors that he's targeting? I don't know the institutional ownership of MicroStrategy at this point, but obviously, yes, you're making a long bet on Bitcoin. So lots to cover here in terms of this. I thought we talked about Microsoft potentially going to their shareholders with a plan to potentially get approval to go acquire Bitcoin.
Yeah, that'll be in December.
He's going straight to Wall Street. He's going straight to the market and saying, if you want to be in on this, I need help raising money, and we'll find out what the market says.
Yeah, it's interesting because people could go directly buy Bitcoin, but they're buying MicroStrategy.
Yeah, as a proxy
I'm not sure what the benefit there is. You used Steve Jobs' analogy. I've often heard him referred to as Rockefeller as well. Because history as it takes place, and then you zoom out, 10, 20, 40, 100 years later, the good and the bad is remembered. Sometimes it's healed, but like Rockefeller did a lot of good, but he also wasn't great sometimes, right?
There's some controversy. Yeah, sure.
So he may fit in that same bucket depending on the lens you use. So,
well, it's in line with a lot of the news that we've been seeing around Bitcoin, though, for the last couple of weeks, in terms of just a lot of revised projections. The second one caught my attention because we're talking about now it is a reserve asset. And a price projection. I'm assuming that's what that $3 million number is.
Yeah. And so, I guess to their credit, this is Van Eck, the founder of Van Eck Securities. was on CNBC, I believe, on November the 3rd. So before the election, before we had an idea how this was all going to go. And he said, we have a model that assumes that by 2050, Bitcoin becomes a reserve asset, is held by central banks at a 2% weighting. In that model, we have arrived at a $3 million price target. Maybe 2050 is a long ways away still. It's 26 years or 25 years. And $3 million seems like a long ways away. I mean, Bitcoin right now is at almost 93,000. And I mean, it's moved very quickly the last week. And
it has. Yeah.
Like, I guess you can quickly get to $3 million if you have that kind of, in some sense, forced buying. But it's a crazy number to think about. Especially
well, in light of so investors who are already in crypto and already own Bitcoin, and they're long, right? One thing that I mentioned in the pre-show that we were talking about is we've mentioned them before, but Bitwise does a lot of research. They put out a lot of content for advisors. And one of the things they said that's come up is there's a lot fewer sellers right now. There's a lot more folks that are holding and expect to hold for a long period of time. So that what I am fascinated by is I feel like this conversation we had, I don't know if we had it on this show, but we talked about Bitcoin at $1 million. And that was sort of like an outlandish number that you and I were like, where are they getting that number? And then it was 2.
Right.
And now we're starting to hear 3. So we use this word too much in this business. Interesting. I think it's a way for us to just try to understand something that we don't all have a lot of context for, or we don't have a lot of strong feelings and opinions on yet. We're forming them. Right.
Yeah.
So something to watch for sure.
Yeah, and I guess there's another way to illustrate this, and I guess metrics you can put around it is just watching these Bitcoin ETFs, which is our third topic here, where we start to talk about BlackRock's IBIT in particular. But these Bitcoin ETFs since January, it has barely been 10 months. As of actually 2 days from now, it'll be 10 months
since they launched.
Yeah, right. And everyone was like, I don't know if people were, again, we've talked about this. People were saying how, we might get to 5 or 10 billion AUM by the end of the year. That quickly happened. And now you have a single ETF, IBIT in this case, that has 40 billion of assets under management. And BlackRock's like a week and a half ago, so roughly a week before the election, said that they thought by the end of the year they would have 40 to 50 billion in AUM. So they've already hit the lower end of that target. Yeah. And the way this is going, and by Thanksgiving, they're going to be at 50. It went from 30 to 40 in a little over a week.
Right.
It's just
one thing number. All the calls that I'm on with asset managers, issuers, sponsors of ETFs and different offerings, they always ask, do you own today? Do you allocate to your clients today? And do you intend to allocate over the next 6, 12, 18 months? Right. And in the case of Bitcoin, I'm like thinking, when I got that question yesterday, does allocating the last hour count? Where does that fit into the equation? Because I think there's a lot of advisors who are thinking about where this fits in an allocation. I think there's a lot of advisors that are thinking, what is the sizing? Should it be 0.5%, 1%, 2%? You'll likely need to rebalance if prices get anywhere close to these estimates. Which is to say there's a lot more merit for an advisor to say, I'm going to go in, I'm going to start acquiring personally before maybe I want to go take it out to clients. Right. Because you're likely going to get that
whether
question.
That's front running or not. So,
right. Yeah. But the reality is I think this IBIT story, and we could talk about any number of them, I think before we went live with our notes yesterday, when we were talking about the show, it was at 30 billion, or the estimate coming out of the weekend was 30 billion last Friday. And now here we are at Wednesday and we're at 40 billion. They've had days recently with over $1 billion of inflows to the IBIT ETF. Just in the single ETF. Yeah.
So a few more numbers around this. So they did it in 10 months. The previous record to get to 40 billion took 1,253 days. So call it 4 years.
4 years. Yeah.
And it's now in the top 1% of all ETFs by assets. And at 10 months old is bigger than 2,800 ETFs launched in the last 10 years.
And there's a lot of white papers. Before we move on to this next one, there's more and more white papers coming out in research, right? Doesn't mean they're right because they're white papers. It just means that they've taken some time to sort of step back, higher level view, and look at an asset class or look at a particular issue. In this case, when they look at Bitcoin, I think BlackRock circulated pretty widely a paper around the idea that this is now what they recommend anyway, and they're biased, right? They issued the largest Bitcoin ETF. They now recommend or say there is a place for Bitcoin in a model portfolio, right? Whereas like literally 2 years ago,
or 11 months ago,
11 months ago, we were like never talking about the two in the same breath, right? If nothing else, it was a bad thing for the economy. It was a bad thing for investors, etc. How things have changed so quickly, I guess, which is a good segue into we're starting to see more institutional adoption. We had Emory endowment here in our backyard of Atlanta that had allocated, I think, in our last update, and now we have our first UK pension fund. So talk to us about this one.
Yeah, this you brought this one to my attention. I had missed this admittedly, and it was just they have invested 3% of the total assets. It's a quick entry for to jump in at 3%. I don't know if they started and they obviously they didn't go 3% on one day. I wouldn't think, but and I don't know what the reporting rules are in the UK, so it may be different than what we experience here in the US, but it's pretty cool to see just how it's going. It's the corporates, like we mentioned, on Microsoft. That I imagine that's a snowball that quickly gains steam if Microsoft or one of those top 5 companies by market cap starts doing it. I wouldn't be surprised if Apple joins in, either because of Microsoft or right before. Tim Cook was recently interviewed on CNBC and said he has crypto and he thinks it's part of a balanced portfolio. Granted, he is not a financial advisor or anything like it, but he does have some sort of I guess weight to his comments when he says something like that. But then then you start having pension funds and state endowments and all sorts of stuff, or state pension endowments do it. So it's pretty cool to kind of see it unfold.
Yeah. And
There's days it feels like it's going super slow. Then all of a sudden you wake up the next day and there's 3 of these, and you're like, oh my gosh, here we are.
Yeah, and all of a sudden we started the week with Bitcoin. Post-election was running up above 70-some thousand, right? Touched maybe 80 in the days after the election, and now we're sitting today over at 90. So
and 93.
Yeah, I mean, there's a lot of assets that are bouncing now. That doesn't mean they're going to not bounce down, right? But they're bouncing post-election. I think there's optimism in the market right now that we're going to see a little less regulation, and there should be potentially a little bit more clarity. Do we get crypto regulation? Probably a bigger topic, but at least a little bit more clarity about a path forward and what that potentially looks like. There's also a lot of crypto bulls, I would say, who are saying just when you think you're going to get clarity, keep an eye on the fact that with all this quote unquote optimism, euphoria, also the reality is that you're going to see a lot of bad projects. You're going to see a lot of people that are sort of the Johnny come lately to the party with a new thing. So investors have to just be very mindful and diligent.
Yeah, and it's what's caught me off guard, admittedly, since the election is up until that point, it was very much the narrative in the crypto industry. We need regulations. We need regulations. We need a regulator that doesn't try to tear an industry apart. Trump wins the election. He has stated in the past, back in July, that he is potentially for the idea of a Bitcoin reserve. I will tell you, the only thing that you hear on crypto Twitter right now is about a Bitcoin reserve. It's like we all forgot about regulation, the need for it. And, admittedly, it's all the Bitcoin maxis. You almost can see the drool on their face through their tweets.
Right.
But
I have a question for you. I know you and I talk a lot more offline than we do on this show about utility and what is the purpose of, just look at that question from the vast majority of people. The reality is a lot of advisors and a lot of people that just don't understand Bitcoin, crypto, digital assets, DeFi. And there's plenty of folks that are like, I just don't understand what it's there for. I don't understand what it's used for. Right. You compare that to our next, bullet there, Bitcoin ETF. Gold, like people can, I guess there's a lot more folks that just understand gold. Like you can wear it, you can protect, you can, you can preserve it, you can use it. Like, and so I think people have a hard time sort of putting their arms around that. But with that said, I'd love to ask you, when you think about utility and digital assets, before we go to this next to last Bitcoin bullet, did the election change what you thought was going to happen with Bitcoin? Because I know you talk about cycles, and you talk about we were coming, we were in this crypto winter. Did the election accelerate anything in the, if you will, cycle, or was all this $100,000 march planning to play out anyway?
I think it happened quicker than it happened quicker than I was expecting. I'll say that up front. I think it was going to happen. I did think that the top for Bitcoin in this cycle was 120 to 150,000. Is that still going to be the case? I don't know. I have spent the last week, as I've watched crypto and just the markets in general, but I'm specifically paying attention to crypto, just rip higher. And I'm like, now that, there was a bit of a pressure relief valve that got let out once it was clear that Trump was going to win. So you had 4 years of pent up, like, oh my gosh, this industry is being held down by the regulator. That appears to be going away, or will be going away with, different leaders at the SEC in particular, and just Congress being actually potentially for crypto or pro crypto. What I've spent the week thinking about is how does this change the cycle? If it does it elongate it? I can't imagine it makes it shorter. But is it more gradual and takes time to get there? Or is this, we're going to rip higher and we're going to rip higher for a lot longer because we've never had the support that we have now?
Okay. All right. Well, it's something to keep our eye on. I mean, from the standpoint of just headlines, right? Because we're looking at all this news, and so much of it for the first 15, 20 minutes of the show has been around Bitcoin. There's obviously a lot more going on. We want to talk about some of these other things like tokenization, for example. But yes, we'd have our head in the sand if we didn't probably lead off the show with, just the reality of just the magnitude of the move up over the last, month, call it few weeks.
Month, and especially last week.
Yeah.
And the last bullet here on Bitcoin, and we can move on to the tokenization. So just looking at US spot Bitcoin ETFs, comparing it to US gold ETFs, it is now 2/3 of the way there to having the same AUM as gold has. Again, in 10 months.
Right.
Super early. If you zoom out and look at it from a whole world perspective, I think it's roughly 1/3 of the way there. So there's more work to do. But I would say that's the closest thing that Bitcoin is compared to a lot of times. And especially if you start thinking about a reserve asset, gold is typically on the balance sheet of government banks. So it's a decent analogy there. So on to treasuries. This won't be quick, and admittedly, the listeners can't necessarily see this. There's a chart that Bitwise tweeted out about tokenized U.S. treasuries. There's different funds that are doing this, from Ondo Finance, BlackRock, Franklin Templeton, and a few other smaller ones or less known ones. But it is crazy to see, like, the chart was slowly ticking up. Then you get to roughly towards the tail end of Q1 2024. And this thing went to a 45-degree angle, and it's up to the right. I'd imagine this curve even accelerates even more when there's actually real regulations in place, and these things can be used for more than just truly buying a treasury on a blockchain, because that's all it is right now. You can kind of use it as collateral, but that's not the easiest situation right now to pull off. But it's just, I look forward to being down the road again, a year or 2, 5 years down the road, and looking back and just coming like, oh, how silly was that? We thought that was cool, because look what it's doing now.
Right. And I think we can cover that second to last bullet around tokenization. There are other funds out there from asset managers. In this case, UBS Asset Management launches its first tokenized investment fund. I think we're going to see more and more of this. I mean, I think you and I, you've been in the industry now long enough in terms of the investment management industry. I mean, there's such inefficiency when it comes to the documentation and the subscription and the liquidity and the ownership and all the things related to limited partnerships and private funds. Credit to investors for being willing to go through the paperwork and the slog of adding capital when you need to, because it's just harder than buying an ETF or buying a mutual fund or buying a stock on your Robinhood app or your Charles Schwab app. So I think we will look back in a shorter period of time than we probably are thinking today and say, yeah, why aren't all the funds tokenized? Like that makes sense.
Right.
And then it's going to march to other areas of the financial markets, right? Because it's just so big. Like whether it's real estate or it's titles or it's records. That I just think that the idea that we are not using that technology yet, it's just a matter of if. And if there's one thing that gives me some optimism is that how quickly the ETF took off. And the ETFs took off with respect to owning Bitcoin.
Right.
It was like, was it because the vehicle made it easier and you didn't have to deal with self-custody and you didn't have to deal with trying to open a digital wallet and go to Coinbase? Or was it that the market was just more ready,
Yeah, probably all the above.
Or great marketing.
Yeah. Well, all of a sudden Larry decided everyone needed it too. So we got the ETF. You mentioned one thing I'll mention real quick before we move on to the next one.
Move to our poly market whale story.
Yeah. So you mentioned Robinhood. So I actually saw an article today, a little off topic, but I guess it helps illustrate why you might use a blockchain. Vlad, the CEO and founder of Robinhood, was saying how that they bought a crypto exchange Bitstamp about 6 months ago.
Right.
And there's two different pieces. He was saying how it cost them 10% of the same, or actually it's 10% of the full cost of running a brokerage to run a crypto exchange. So it's dramatically less. He's like, over time, he would love to kind of see all that merge together, but it's I think part of it is there's regulation on one side and not the other, so there's paperwork to do. But we'll see how that unfolds over time.
Yeah, I think one last step here is we talk so much about regulation around crypto and with respect to the consumer. I think a whole other area, and this was brought up on a call recently by Matt Hogan, the CIO of Bitwise, just regulation around integrating digital assets and the infrastructure around blockchain technology in the banking system. There's other regulators beyond just the SEC. I mean, we talk a lot about the SEC because they're constantly in the news, right? But there's other regulators that are going to get probably new leadership, and they're going to, I would think, be asked to really look carefully at how they can integrate this technology. And we're talking about like the OCC and the Treasury Department, the Fed, all these different agencies or quasi-government agencies, I think, are going to get. I think 2025 is going to be an eventful year if you work at a regulator with respect to Bitcoin and digital technology. I mean, you're going to have to dust off the playbook because I think a lot's coming.
Absolutely. So jumping back in our bullet points here, the poly market thing, I was fascinated by this all through the election. You can kind of see these markets. I know we talked many times about it.
Right.
And you were explaining some of this to me the other day, but so there was ended up being a trader from France,
right,
on poly market that ended up profiting $48 million with the Trump victory. He used 4 different pseudonyms, so it's kind of split up amongst the 4, not necessarily evenly, but at least broken up. And it was just fascinating to kind of hear his strategy on how he went about making his bets.
And why he made the bets he did. From what I read, and the interesting and fascinating thing is, around polling and the idea of polling. Is the poll right? Is the poll wrong? And what I thought was so interesting is his approach was ask the neighbors of, let's say Robert or Andres, ask the neighbors to the left and to the right and to the front and to the back of them, how do you think they're going to vote? And he's like, effectively, that's my methodology, is that neighbor approach of, I don't know if people are going to be honest, or they're going to tip their hand, or they're going to say who they're going to vote for if they get, contacted by a pollster. But his idea is, if I live next door to Robert, I know how Robert's likely to vote. And so he's asking me to weigh in on your vote. And I thought just interesting. And he's like, I'd like to see more of this polling method used in America. So we'll see. But highly profitable nevertheless. And it was a series of trades, right?
Correct.
Under different pseudonyms.
A series of trades. And then Polymarket in general, they ended up tweeting this out the day after the election, which is, I guess, is a bit of like a backslapping for themselves. But what they projected the finished on a state-by-state basis who's going to win, they projected it on October the 25th, and it was exactly correct.
Okay.
So the markets were speaking. Whether people wanted to listen to them or not, I guess is different, but it's pretty fascinating to kind of see.
So what happens to Polymarket from here? I'm curious. That's the postscript. I'm is there another area of the, I guess,
I mean, there's Polymarket. There's things for who Trump's going to add to Secretary of State. I mean, there's
you can bet on all kinds of things. Yeah. Okay.
But I don't know. Will it grow to be something else? I don't know. It was somebody's idea the previous election when Trump was running against Biden. He threw it together. I think it was around, but didn't really make to the same level of popularity it did now. But
interesting.
Anyway, nonetheless, pretty interesting to kind of see how it ended up playing out.
Yeah. Okay, we got to talk regulation and politics. We covered UBS and their tokenized investment fund. So Gensler and the SEC.
Yeah, again, it's not a podcast without talking about Gensler. And soon enough, we can almost be certain we won't be talking about Gensler. Maybe someone else we're talking about. But
sure,
he,
or his next role,
Yeah, his next role. He's probably not going to get the Treasury like he wanted either, would be my guess. But so I've listened to a few podcasts with attorneys talking about all this different enforcement action the SEC has been doing, the Ripple case, the Coinbase case, the Kraken case, and there's tons of cases. Somebody actually shared a number in one of those podcasts. There's over 200 active cases with crypto at the SEC right now. The vast majority of them aren't making the news that we would even probably see. But it's a crazy amount. And again, it's a regulator kind of getting to make the rules as they go along. And that's how we get there. But it sounds like, the general consensus around how the SEC is going to get handled is there may be a stay to all of this when somebody first gets in office as the chair, or they literally make a list and they start going down. It seems to be the bright line is if there was fraud in this case, then maybe it needs to be adjudicated.
And there are some of those in
there certainly are. Yeah. Had its bad actors for sure.
Yeah.
But the ones that are not fraud, I mean, the Ripple case is a great example. The Coinbase case, there's no fraud. The Kraken case, there's no fraud. The big ones, there's no fraud outside of FTX. And that one, we'll set that one aside. We all know how that one worked out. But at the end of the day, it's just kind of, it sounds like what will happen is they'll either be settled or they'll just be straight dismissed. And somebody brought up the interesting point that maybe Ripple isn't ready to dismiss this thing because they want some of these other few things they're about to argue to be cleaned up. So maybe it ends up as part of the negotiation. If the SEC took less than the 125 million, because now Ripple's kind of got some leverage here, what could happen? It'll be cool to kind of see how this shakes out. But likely none of this really happens until probably closer to the middle of the summer, because you have to get the new chair in place. They got to get up to speed. They obviously got to get confirmed by the Senate and all that stuff, and then kind of start moving forward. So there might be a bright light at the end of this tunnel, but we'll have to, I guess, hope to be optimistic and take our time with it. So,
yeah, I mean, everything points to the busy folks in DC right now are headhunters, because everybody that's going out is going to be needing a new job, and everybody that's coming in is trying to figure out if they don't get the job they want, which job they want. So there's a lot of behind the scenes shuffling and jockeying happening, as we all expect, right? It's going on all the time. It particularly as it relates to crypto, I'm going to be keeping my eye on not only who is floated as the chair of the SEC, but also some of these other agencies, because I think there needs to be coordinated regulation. There needs to be less about turf battles and who gets to be the lead, quote unquote, the lead dog, and more about how do we get back to being a leader when it comes to the innovation and the job creation, and obviously, the projects that can benefit other areas of our economy. We're just behind, competitively. So I think there's a real opportunity, if it's coordinated, to do some things over the next 4 years.
Yeah.
And beyond, right?
A few of the names that I've heard floated by people that, at some level are in the know, is Giancarlo, Brian Brooks, and the third one is escaping me right now. But it could not be those people, or it could be those people. Brian Brooks would be amazing. He used to be the chief legal officer. Chief legal officer, but worked at Coinbase, and then he went to an office within the Fed and different things. So, excuse me, the comptroller, not the Fed. So I don't know. There's some interesting folks out there that are, crypto, I wouldn't say bulls, but just like crypto cheerleaders, and kind of see how it could be used in for a lot of good. So
yeah,
we will see here probably in the next 2 or so months. I imagine that one is announced before Trump's even eligible, and they can start working on it.
Or he's come. That's confirmed. Yeah, I mean, this has been a busy week for him. He's filling a lot of cabinet positions, and I would expect over the next week or two before Thanksgiving break that a lot of people know kind of what seats they're going to be in, or at least they're being vetted for those seats. So crypto PACs, what a remarkable sort of, the PACs. We know that there's a lot of money in politics, and the PACs in the case of crypto really had an amazing run during the election, 48 for 48 in terms of backing candidates.
Yeah, and admittedly, it's a not only were they accurate, but they potentially influenced the outcome.
I think so.
There's enough crypto voters that like you can make the case that maybe didn't swing all these states, but some of the states that could have been the swing votes on that kind of flipped the states. So they spent $135 million in 48, like you said, out of the 48 candidates that they backed one. I mean, to think that they batted 1,000 there is insane. Even if it was 90%, we would be happy with that potentially. But it's early days. They even said that they're not holding back. They're already going to start working on trying to do some stuff for the midterms that are coming up. So like it's not like they're just shutting down camp at this point.
Sure. Yeah. I mean, there's momentum, right? There's momentum. So yeah, they're going to continue to chase to try to get their agenda now in front of folks.
Yep. And we already did the UBS, so we'll go on to the last one here. So Bernstein is a $800 billion asset manager.
Yeah. Moved their headquarters a few years ago to Nashville, Tennessee.
I didn't know that.
From New York. Yeah, it was a big deal obviously for Nashville to land a big New York relocation, but brought a lot of jobs to, a lot of high collar, white collar, high end financial services jobs to Nashville. But a sizable firm closing on $1 trillion.
Yeah. Well, as maybe the last week is gone, depending on how much crypto they have, they may already be there.
That's true. Yeah.
But jokes aside, they sent out a letter on the 11th, so on Monday, that basically said, "Welcome to the crypto bull market. Buy everything you can. Don't fight this. Add crypto exposure ASAP." As literally the subject / headline.
Yeah.
It can't be more clear. So it's kind of cool to you just kind of see these more traditional folks. I wouldn't say buying in, but just actually encouraging.
As an advisor, this is my thought on this a little bit. We talked about this early on in some of our shows about advisor psychology, because there was a lot of headlines early on when we were talking about these ETFs, right? Who was going to approve them? Who could actually sell them? For a longest time, individuals had to go out, open a wallet, open a Coinbase account, buy the Bitcoin themselves, right? And then these ETFs made it tremendously easier. However, not all platforms, all banks, all insurance companies, all wealth advisors approved them right away. And still there's a number of them that have a hard time buying Bitcoin for their clients. To me, this is, and I said this, I remember saying this is about also playing offense. If you're an advisor, and I don't want advisors to steal my playbook, but it's out there, right? Like if you're not talking to your clients about things that your clients are hearing about at work, at the gym, from their kids, and it's like they call you and say, "What are we doing?" And you're the advisor that's like, "I don't know what you're talking about." Like you either are uninformed or you're not really keeping your eyes on the ball on the court for your client. So for me, this is, I'm not saying they don't have conviction at Bernstein. They clearly do to say it in this way. But I think it's also about saying, why are you with that other advisor? Like they can't allocate the things that you should have exposure to because they're either inept or the compliance or whatever, So I think this is also an opportunity for these Bernstein guys and these advisors, to go out and say to those clients, maybe on the fence, like, maybe we should think who's managing our capital.
Yeah, it's advisors have a lot they have to think through with this. It's like, when do they want to start adding it? And then I think the next question that they don't realize that they're going to get to is, how do I deal with rebalancing? When do I do it? For a brand new asset class, no one is managed through a new asset class that's alive right now. And like, there's people that added Bitcoin ETFs as they launched that are already over 100% or approaching 100%.
Right. Of their target allocation. Yeah.
Yeah. And it's like, okay.
So they set a 1.5 to 2% range, and now they're at 2.5, or they're pushing up against 2. And it's like, do you want to jump off the rocket ship, or do you want to trim, or do you want to stay and maybe let it go to 3? That's an interesting conversation. Yeah.
Yep. And obviously, I don't know if it's on a per client basis, but it can be tricky. And, I wonder if there's ever a world where an asset manager is too conservative, trims too soon, and then they turn around and get sued over it. I probably not, because there's probably enough disclosures that kind of clean up something, that scenario. But like, there could be disgruntled clients that feel like they missed out on something because you were, as an asset manager, or an asset advisor, trying to be prudent and take some risk off the table. So
yeah, I think, you got to get ahead of that. To me, if you're an advisor, you talk about the reality is this is a volatile asset class. That should be part of the pitch, right? It could be down 20% just as much as we could be up 20% in a quarter. As we get more adoption, as we have more owners, as we, I think that volatility, starts to come in a little bit. I think that standard deviations go from, whatever 6 to 4 to eventually, that you don't see the wild spikes. However, if you don't talk about the downside, you're not doing your job. So I think you have to talk about the volatility, and you also have to talk about the reality that, well, we started at 1 or 2, if that's where you start.
Right.
But what happens if it gets to 4, right? And the correlations, right? The correlations with other asset classes. So you can't do it in a vacuum. The good thing about it for investors, hopefully, that are talking to the right advisors that are open-minded to it, is it's a lot easier now to buy it. That's the reality.
100%.
So you can get in, but you can also get out.
Yeah. Well, we have run long, but it was a great conversation.
Yeah, it was fun.
Thanks for joining us on this episode of the Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.